Sanjeev, so good having you. Thanks much for joining in. The macros, Sanjeev, seem to have turned in the favor. I want to start off with thoughts on what the currency's done over the last few sessions, and arguably in the last couple of days in the wake of the RBI government board meet as well. The currency markets have reacted very strongly.
Yeah, so I guess, it is simply reflecting the fact that you have seen a big decline in crude prices. So that takes off a lot of pressure on the currency through the current account and BOP route. Now, remember, oil prices have gone up to $85 a barrel at one point in time. They are down to more like $66, $67 a barrel as of now. So that effectively means you are looking at, on a 12-month rolling basis, as much a relief of something like, 1 percentage point of GDP in terms of CAT to GDP ratio. So that's a pretty big number. So really the rupee just reacting to lower oil prices as of now. And in turn, it sort of also results in a lot of benefits to the government of India, in the sense, earlier there were some concerns that the government fiscal management will become a lot more difficult at higher levels of gold prices. That's no longer the case. And also from inflation standpoint, again, I don't think the RBI needs to do anything as of now in terms of interest rates. So in terms of all the three major macroeconomic parameters, currency, interest rate, and fiscal situation, I think lower oil prices is a big deal for India, and that's what is reflecting in the currency.
Do you see this, we're currently right now trading around 71.3 odd. Do you see this as being fair enough for the currency from where we've come off? And on a separate note, the RBI board meet, which was taking center stage yesterday's session, both the RBI and the government seem to have taken a step back from the edge. Does that give you a little bit of a comfort?
On the first part, if you look at the fair valuation of the currency on a 36 currency RER basis, then it looks like somewhere about low 70s is a good fair value for the currency, even though technically the RBI's 36 currency RER number is showing more like 110. That may not be entirely correct, because that is based on the base of something like 2004. So I don't know whether that is really valid as of now. So I sort of take look at more recent numbers, and based on that, it looks like it is a reasonably fair zone as of now. Low 70s, I think, is fine for the currency. Coming to the second point of RBI and the speculation in the press about the issues between the government of India and the RBI. Yeah, you're right in the sense that we haven't seen any real announcement as of now. Yes, the RBI and the government have announced certain joint committees to look at certain issues with respect to the PCA framework for the PSU banks, the issue of capital reserves of the RBI, and so on and so forth. So hopefully over the next few weeks we will get some more clarity on this. But you're right, at least the sense of in a way struggle which seemed to be there between the two, and the tension which were there, that seems to have, at least for the moment, dissipated.
Sanjeev, as somebody sitting outside India, if you had to take an investment call on India and you had a checklist for yourself with regards to the positives and the negatives, what would overweigh? Would the positives overweigh the negatives, or would it be vice versa?
First of all, I only sit outside India physically. All my work is confined to India, so I'm not really an outsider in that sense. But see, the top-down view of India has dramatically improved, I would say, over the last few weeks, just based on lower oil prices. And as I was saying earlier, all the three macroeconomic parameters look certainly a lot more stronger. So at least the top-down investment case has improved quite nicely. If you look at top-down market valuation, is still slightly on the higher side. It's roughly about 20 times on March 19 basis on a Nifty free float basis, about 16 times on March 20 basis. So it doesn't look too bad on March 20, I would say, but of course that is predicated on something like 26% earnings growth in March 20. Whether that will come through or not, we'll have to wait and see. So I think on a standalone basis itself, India doesn't look too bad, I would say. Of course, valuations are still on the higher side, but I'm okay with it, because in some pockets of market, valuations are quite attractive, I would say. Now coming to the global bit, and that's where you still have some overhang, I would say. First of all, on oil itself, I don't know whether this is a temporary relief, or oil prices again go back after 180 days It's hard to say because as of now, the exemption which has been given by the US is only valid for 180 days. And what happens in early May when this exemption period goes away, we'll have to wait and see. The risk we run is if the OPEC plus, including Russia, decides to cut oil production, you could see again a spike in oil prices. So that's something to keep in mind. I'm just hoping that over the next 6 months, the oil prices remain where they are, and hopefully the elections go smoothly. So there is no really, oil doesn't become an election issue. Let me put it that way. Then coming to the whole US-China issue, there are issues still over there. China is slowing down. Looks like, and on top of that you have this US-China trade issue which is clearly not resolved. If anything, looking at the tension between the leaders who were there at the APEC summit recently, it doesn't look like we have made any progress over there. So that issue is still outstanding. And lastly, we still have the election hump to go through in India. You have 5 state elections. Results will be available on December 11th. 3 are pretty critical from market perspective. So if you see an outcome which favors the BJP, the market could possibly see a little bit of a relief rally. If you see an outcome which makes the market worried about the chances of BJP forming the next government, you could actually see a correction in the market. So most people seem to be of the view as of now that the BJP will lose Rajasthan and retain power in Chhattisgarh and Madhya Pradesh. So if it is on expected lines, I don't see much of impact in the market. But if the BJP loses, let's say, Madhya Pradesh on top of Rajasthan, the market will definitely develop cold feet in terms of, the chances of BJP forming the next government. Obviously, it's early days, so we'll see how things pan out. So December 11th, important day, I guess, for the Indian market.
Interesting, and I think those answers summarize almost everything that Sanjeev Prasad would say about the market monitorables currently. Take a moment to thank you, Sanjeev. Unfortunately, have the window only for this much, but thanks so much for joining in today
My pleasure.
and giving us that perspective. Really appreciate your time.